As we know, President Trump posted at 7:23 a.m. Washington time that they've had very good and productive talks with Iran, and that a few hours later Iran said that's not true. The US share market jumped when Trump did that post and then fell a third of the way back when Iran rubbished it. And likewise, the oil price fell sharply and only went up part of the way again. So what that tells you, I think, is that the markets really want it to be over, which is no surprise, and are prepared to grasp at any straw and hang on to it. A couple of other straws in the wind today, as it were. First, investment bank Goldman Sachs put out a new oil price forecast based on traffic through the Straits of Hormuz staying at 5% of normal levels for 6 weeks, followed by a 1 month recovery. The result is on this graph. It peaks at $115 a barrel. But if it stays at 5% for 10 weeks, the peak is $147. Second, one of the world's most highly regarded investment strategists, Marco Papic of BCA Research, said if this doesn't get resolved over the next 7 to 10 days, we're looking at a pandemic-style shutdown of the global economy, which perhaps explains why markets are in the Egyptian river, denial. That's not something anyone wants to think about. The local market demonstrated that by rising 0.5%, with mining stocks leading the way. The oil price ended up around 4% higher, while gold and silver kept falling. The US and Asian markets stayed up, and the Aussie dollar stayed under 70 US cents. And finally, Macquarie Research produced a report today about the impact of AI on bank employment, looking at how good it'll be for cost-cutting and higher profits. The most likely base case, according to Macquarie, is 18% reduction in jobs, gradual adoption 9% and rapid adoption 30%. Now, there are 185,000 people employed by the banks. 18% of them is 33,000 and 30% is 56,000 people. But of course, Macquarie could be wrong. And that's finance.